And it's the start of the trading day right here in Lagos, Nigeria. Let's get to the top stories that set your agenda now. Starting with the oil market. We see oil prices ticked higher, bought by a bigger than expected weekly decline in U.S. crude stocks. Always keep an eye on the U.S. crude stocks at this point, but we're still trading within that range. That's for Brent, between $83 and $86 per barrel. But we have $85.21 this morning, up by 0.2%. The U.S. grade, $83.16 a barrel, up a bigger 0.4%. But we see the spread between the Brent and WTI price, that's closing up more at this time. It's at the all-time low right now, $83.16. That's for WTI. And to other stories now, we see the management of Dangote Industries Limited have commended the Nigerian Upstream Petroleum Regulatory Commission for its interventions in the oil company's crude supply requests from international oil companies. However, the Vice President, Oil and Gas, Mr. Divji Edwin, stated that IOCs have consistently frustrated the company's requests for locally produced crude, forcing them to buy a higher price from trading arms. Mr. Edwin urged NUPRC to address the issue of pricing, noting that the company had to pay $2 to $4 per barrel premium above the official price set by NUPRC. And experts and economists are setting up their crystal balls now to get a sense of what to expect for Nigeria's economy in the second half of 2024. The latest from the Lagos Chamber of Commerce and Industry, experts referred strategies for a possible soft landing for the Nigerian economy. Take a listen.
The Lagos Chamber of Commerce and Industry 2024 Mid-Year Review and Outlook is, as expected, a meeting of economists and think tanks of the Nigerian economy from the private sector.
Nigeria has gone from 3.3 to 3.1.
Economist and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Obani, gives an overview of the current situation.
Fuel subsidies is work in progress, being reduced, but there are still subsidies in the system, and more coming in through import waivers and all of that. The government introduced more aggressive in its tax collection and tax rendition policy. The minimum wage is a hot potato. Nigeria's debt burden, in terms of debt, total, the liabilities have increased. The assets which has been deployed, the use of proceeds is still in question. Domestic debt has skyrocketed, but not only that. In the last 3, 4, 5 years, the people have subsidized the government because treasury bill rates were 2-3%, while inflation rate was 24-25 at that time. Now, because interest rates have increased more to reflect market reality, the debt service, not only the debt has increased, the debt service burden is an issue that deals with us, right?
That allows us now to see federal allocation increase significantly and therefore available to share.
Chief Consultant of B. Adedipe, Dr. Biodun Adedipe, food inflation is his biggest concern, especially with the insecurity factor which is keeping farmers from production. This has also limited raw materials for manufacturers.
When food inflation now starts to affect daily living, then we are at the very edge of crisis that can become a repeat of May 1989. If we are going to transform manufacturing, let's just aim over the next 30 years to do 10% of what China did in infrastructure. Why 10%? Land mass of Nigeria is 10% that of China.
The International Monetary Fund has recently downgraded Nigeria's growth for 2024 to 3.1%, citing weaker growth recorded in the first quarter of the year. This represents a 0.2% below the earlier forecast of 3.3%. Economists, however, believe that with more intentional steps towards growth, the economy could outpace these forecasts.
All right, now let's head straight to the FX market. Now, for the close yesterday, we saw weakness in NAFEM and NAFEX 0.32%, but a bigger move down, and that was seen with the NAFEX window 1,583 Naira. So we see both windows flirting with the 1,600 level at this time. 1.56%, that was the close for NAFEX yesterday. So we're seeing weakness this time. Let's bring in Mr. Bismarck Rwani now, CEO of Financial Derivatives Company. Hello, Mr. Bismarck. Great to have you.
Good morning. Thanks for being here.
So what would you say is responsible for this weak performance of the Naira? We see the dollar index, that's dropped from 105 points to 103 points. Our reserves are rising. We've seen interventions from the CBN in the market. Why is the Naira still dropping?
Well, I think that's a very interesting question, to the extent that Nigerians are asking questions as to why is the Naira dropping? Why is the Naira plunging? Why is the Naira languishing? And finally, some are saying, is the Naira jinx? Should I have bought dollars when it was 1,200? Should I have bought dollars when it was 1,100? One thing is clear, that currency markets are as volatile as any commodity for that matter. Two, there are three variables that are driving the value of the Naira today. One is fiscal, that is government spending. As you know, there's a budget that has just been announced, supplementary budget of 6 trillion. The other one, that's fiscal. The other one is cyclical, which is people are investing, at different times in different sectors of the economy, and that is cyclical. And that goes with the GDP data at any point in time. And finally, and most importantly, is the fact that there's what we call seasonal demand. What is affecting the Naira today is more of seasonality and then fiscal spend. And if you look at the Naira, it's lost 8% in the last 2 months from May to July. In May, it was trading at 1,485 Naira to a dollar. Today it's trading at 1,615, and in some places as high as 1,650. The official window, as you know, trading at 1485 in May. Today, that official window is 1576. And the IATA rate of exchange for tickets, which people buy to travel at this time of the year, was 1,506 Naira to a dollar if you're buying the ticket to London, to New York, to Atlanta. It was 1,506 Naira to a dollar. It's now 1,590. In other words, the Naira has lost 8% in the power market, 5.75% in the official market, and 5.28% in the IATA ticket window. Now, why is this happening? Let me break it down for you so you can understand. One is that this is a season of the year when this is summer season, and because there are high fares, people that used to travel 4 or 5 times a year are now traveling once or twice, and so they front load and everything. And this is the time of the year when the weather is favorable, warm weather in Europe, warm weather in Canada, warm weather in the United States, and warm weather in Asia. So this is the friendly time to travel. At the same time, this is the time when schools are resuming. Children are graduating in the May-June season. Those tickets were bought, and schools are resuming in August and September. So there's seasonality of travel, seasonality of IT and digital transactions, conferences, and so that's one. Two, the federal government of Nigeria has just granted a waiver, a reduction in duty for imported commodities, which will last 150 days from August 1 till sometime in maybe December and January. What this means is that if you imported any commodities, i.e. wheat, sugar, rice, maize, and you would pay no duty. And therefore, it gives you a window. So people are now ordering those commodities. So the demand for commodities, imported commodities, has increased. Well, the problem is that because the demand for commodities has increased, the exchange rate has actually depreciated because of lower supply. Now, the issue is this, that because this demand has increased sharply, and the exchange rate is depreciating, the savings from a reduction in duty, right? The savings from that reduction in duty and the waiver is more than compensated negatively by the exchange rate itself. So in the end, by September, October, you will find that those prices which had originally come down have become more expensive because the exchange rate has suffered. And it is happening at a time when the dollar itself is weakening. So naturally, what we should see is an appreciation of the Naira at this time against the dollar because the dollar was weakening. But in the reverse is that this has happened. Now, what's the outlook? Now, the reason one is that inflation is expected to moderate towards the end of the year. If inflation moderates, then the exchange rate kind of appreciates and interest rates can come down. But in the meantime, Naira spending, 6 trillion Naira supplementary budget, minimum wage, which is going to increase the fiscal spending as well. And the fact that this seasonal demand is compressed in this period between June and September means that the Naira stays weak between now and September. But after September, the Naira begins to appreciate gradually and begins to find its true value. Another factor that we have to take into consideration is that Nigeria has actually gone into a lot of commitments, what we call counter-trade commitments, where oil has been pledged forward for dollars coming in. And we had previous commitments. So the cash flow is disrupted by these transactions where we have front-loaded our demand for dollars and entered into various transactions, and that is beginning to affect the value of the Naira in the parallel market, at least for now.
Okay, Mr. Ronnie, but looking at other climes at this time, when the U.S. Fed, started the battle against inflation, there started raising rates, then we actually saw the U.S. dollar, especially the DXY, that average there, that actually rose, with the rate hikes. But here, we've seen over 700 basis points in the first half, but we're not seeing the Naira actually follow that trend. But if we look at our neighbors like Ghana, South Africa, we're seeing some stability with their currency, even though they also had the same problems. What do you think is stopping the Naira from actually following these trends that it should actually follow? And what should be done to make the Naira actually sensitive to rate hikes?
Well, I think the understanding is that an increase in interest rates increases the propensity to save, reduces the propensity to consume, and actually, and makes that currency, the domestic currency, more attractive relative to others. But you are assuming that that is the only factor. Apart from the exchange rate, there are other variables that kick in to make inflation high. And if inflation is high, then the currency weakens. And there's a time lag between when you announce policies, when the policies kick in, and when the effect is felt. You mentioned Ghana, South Africa, and Kenya. In all of these countries, and especially let's take Ghana for example, inflation got as high as 54%. They increased interest rates quite aggressively, and now inflation is down to about 28% in Ghana. Same thing in South Africa. They increased interest rates aggressively, and they brought down the inflation rate to about 5%. Every currency and every country has its own fundamental drivers that affect its economy. And that is why I mentioned at the beginning that fundamentally, the Naira should be strengthening if you annualize the trade between the Naira and the Nigerian economy and international partners. But there are seasons of the year when things come together. And that is what I call this seasonality and the cyclicality, which is taking place especially during the summer months. This should ease up later on. However, there's something else. The fiscal spend in some of these countries, the level of leakages in some of these countries is not as high as in Nigeria. So Nigeria, technically speaking, must begin to address the issue of leakages in the system, governance in both the public and private sector, and the linkages between sectors so that you drive it. You're dealing with growth, you're dealing with revenue, and you're dealing with debt at the same time. All of these factors go to support the currency in the long run But in the short run, we would have some pressure. So expect the Naira to trade at about 15.50, 16.50 for the next 4 to 6 weeks. But after that, it begins to appreciate gradually. Okay. There's some hope at the end of the tunnel.
All right. Well, we'll see if we'll get a soft landing for the Naira at this point in this second hour. But thank you so much. Always great to have your perspective, Mr. Bismarck Arani, CEO of Financial Derivatives Company. Thank you.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll drill down on capital raise season. That's with the banks. That's in a moment. Just stay with us. Welcome back. Well, it's still capital raising season, and a couple of banks are leading the charge right now. But today we'll zero in on Access Holdings plans and what's in it for investors. Join us for this conversation as Mr. Teslim Shetabe, the managing editor, ProShare, joining me right here in the studio. Good morning. Great to have you.
Good morning. Thank you for having me.
Fantastic. So definitely we see the banks now tapping the markets right now, and Access Holdings, they're right there at the forefront. Talk to me about why they chose to actually go with the pricing that they're going right now and the rationale behind their listing at this point.
Okay, if we start off with the rationale for their listing, obviously the central bank has stated that any bank that wants to engage in international transactions should have a share capital of 500 billion naira. And if you want to stay national, 200 billion naira. So the obvious reason is to show up their share capital straight up. But the Access Bank issue is particularly interesting because they're trying to raise 351 billion naira by way of rights, saying that, you know what, we have so much confidence in our existing shareholders. We don't need to invite any other person. They have an understanding of what we intend to do, how we intend to do it, and therefore we rely on existing shareholders. And that's why you're seeing them have this massive rights offer of 351 billion naira.
And how do you think these investors are actually taking this at this time? Do you think they're going to be as optimistic, as the bank is?
Well, yes, I think they will be. Access Bank has just announced, I think it was within the week, that they had expanded into Tanzania. The East African economies are doing quite well. Access Bank is there, for instance. And generally speaking, the banking sector for Nigeria has gone on a growth trajectory that all of us have seen. They've had massive amounts of growth and improvement in their fundamentals. Their cost of capital has gone down. The cost to income ratios have gone down. Their non-performing loan ratios have gone down. So generally speaking, the sector as a whole has done quite well. And that has been highlighted in ProShare's Tier 1 Bank report for 2024.
All right, so definitely, investors want to put their money where their mouth is. They want to know why they're actually, going into this market. So talk to me about the long-term and short-term benefits that you're seeing for shareholders here.
Well, the thing about it is that investors normally are optimists because they're investing in the future of a company. And the truth of the matter also is that if you're buying the equity of a company, you should have a long-term mindset rather than a short-term mindset. If you have a short-term mindset, you're a trader. If you're an investor, you have a long-term mindset. Because for all the banks, when they raise their share capital, obviously their earnings per share in the short term will decline. That means also dividends per share will also decline for all the banks. However, what's the long-term play? Now, we've just given an example of Access. They're going all over Africa. So that does what? It de-risks them from the challenges of any individual market on the continent. So if Nigeria has a challenge, for instance, they're still making money in Ghana, they're still making money in, like I said, Tanzania or Malawi or Zimbabwe. So the thing about it is a long-term play. In the long term, previously there was no Nigerian bank in the top 10 banks in Africa. Currently, we have 4 Nigerian banks in the top 20, and Access Bank is one of them.
All right, talk to me about the risk of dilution now when it comes to existing shareholders.
Yeah, now the good thing about it is that if all the shareholders pick up their rights, there's no problem of dilution. Like I said before, unlike banks that will go for public offers or private placements, Access has said we have confidence in our existing shareholders. So you get 1 share for every 2 that you hold. And if you pay for it, there's really no share dilution there because you still have the same proportion as you had in the past. And so there's no dilution. However, where the challenge might be for those who are short-term players is that earnings per share of all the banks, including Access, we expect to decline. However, that's a short-term position. In the long term, the additional capital allows for expansion and growth in the areas of technology, in the areas of intercontinental presence. So it's now about places and spaces. And for Access Bank, we've seen them play creatively and constructively along those lines in terms of taking places and using technology to occupy spaces.
So, definitely looking at the macros, at this time, you see rising inflation, currency devaluation and all the other, issues at this time.
Yes.
I'm sure most of these banks have not really had to raise capital at a time like this. Most times you see we've not had this, high inflation. So definitely this poses some kind of difficulty for most of these banks, I want to believe.
Okay, yes. So let's take it contextually.
Right.
We've had capital raises in the 80s. We had in 88, we had in 91, 92, right up to actually to 1999, when we started what we called universal banking. It was increased to 2 billion naira. If you look at the charts and you look at Nigeria's gross domestic product growth, the capital raise and the gross domestic product growth didn't show any correspondence. You would have expected that once banks raise capital, they will put that capital to work in the economy and then GDP growth will increase. That didn't happen. But in 2005, 2004, 2005, during the Soludo era, during the bank consolidation, we saw a change. From that era on, we started seeing that the capital that banks were bringing in was also increasing GDP, right? So we've seen when we moved to 25 billion naira, the GDP started steadily growing up. And then we also saw banks see their businesses grow. So let's come back to what you said about inflation rates. Yes, inflation rates could be there, but is that necessarily a bad thing for banks? Has inflation necessarily hurt banks over the years? Our research says no, it hasn't, because banks deal in the business of margins. It's the difference between how much they pay depositors and how much they lend to lenders, borrowers. So we are looking at, say, okay, fine, I can take money, for instance, at a certain rate, and I lend it out, and I have a 7% spread, because banks deal in spread. That's how you hear things like margins. So they deal in spreads. Their spreads are always protected, because they always make sure that those spreads are there. So even if prices go up, they move up, right? So if deposit costs go up, then the lending costs also go up. So really their spreads are protected. Right?
Quite interesting. These banks always do well regardless at this point. But let's look at what to expect, for dividends and the share price.
Like I said earlier, I think, and Procha's position is that in the short term, we believe that earnings per share will decline. And that's because there's so much new shares coming in. They're growing at a rate faster than the rate of growth of the bank's earnings. The bank's earnings will grow, but they won't grow at a rate as fast as the growth in their share capital. Therefore, earnings per share will decline. And your dividends come out of your earnings. So your dividend per share will also take a slight knock. But that is short term. It depends on how the bank applies the fresh capital that's coming. So as the bank applies that capital and makes it sweat, we begin to see earnings ratchet up pretty quickly. and therefore share prices also rise as those earnings grow. So in the medium to long term, good prospects for banking sector.
Right, and I keep asking this question at this time. There's a cost of living crisis right now.
Yeah.
We have some investors that have been on the sideline. Some that don't even care about investing at this point. Then we have the investors. What's your advice to most of these investors about these shares we're seeing at this point?
My advice is that if they have liquidity, I must admit, many of us don't. But if they have liquidity, it's an opportunity.
Right.
It's a good opportunity for them to take advantage of the relatively low prices that they will see now and wait out for a couple of years, and then they begin to earn significant capital gains.
Right. So regardless, try to invest at this point. Thank you so much. I'm Mr. Teslim Shitabe, Managing Editor, ProShare.
Thank you very much.
Thank you so much for coming on the show.
All right, so there you have it, and we saw the local bourse actually buck the three-day positive trend that was yesterday with that negative close. But we'll take a quick commercial break right now. That's it from me on Business Morning before we hand you over to the Sunrise Daily team. Bye-bye.